Good afternoon, everybody. This is Mark Lambert of the Theta's Pendulum Trading Group. We're a Google group. We're in partners with Anthony Marino. Um, and at the same time, I also want to acknowledge and give thanks to Olga Morales of the Paz Fortuna Yahoo Trading Group, which is also another group similar to Theta's Pendulum that deals heavily with GAN-related analysis and market geometry, etc. Just want to give it some kudos. Thank you for allowing me to post every once in a while on your website, and at the same time, just telling you just keep up the good work. I mean, I feel a lot of good energy here, and I'd like to see everybody's websites and everything just continue moving forward, enabling other traders to trade the market. But, anyways, the reason I'm going to bring up this video today, I haven't posted anything in a few weeks. Basically, I've got quite a few questions, even like on Theta's Pendulum also today. How to use market structure and so on, which it's pretty simple. I'm just going to kind of go over what I look at intraday as I trade, and the reason why you really do not have to be an Elliott wave analyst or an expert at anything. If you can see a series of up and down moves, somebody can take trades very easily. But anyways, today I was looking at the S&P 500 cash index, the small short trend channel, which I believe is part of a corrective channel right now. I do believe we have one more down leg to go before we start to move back up and in a larger degree correction. With the break being at 1258.07, if it goes up above that before it reverses, then I guess I'd have to say the analysis is wrong. But either way, what we're going to look at right now is ESs. This is an hourly chart that I've had running for quite some time now. I basically have pulled two projections off of it, so you can actually see it a little bit better. I'm going to go back to the S&P 500. Basically, the projection I have running on that is from this swing to this swing, and then also inside of this I have this swing to this swing, also projecting downwards. So which gives us two Fibonacci projection areas. And as you can see, the market basically bottomed on a 423.6 back, what day was that? 8/8, and then started to move up from there. Also, quite a few other people also looking for a bottom at that time too. So, but how do I use the Fibonacci projections and also the swing failures, and so on, and see if a trend is continuing and whatnot? Basically, I have two projections on the short-term tick chart, which is a 3200 tick chart. You can use any ticks that you'd like, but 3200 seems to be pretty good for me, so I can actually see the market structure building. I do fractal down or fractal up also sometimes to see the bigger picture. But these two swings that I have in here right now, basically this red swing is equal to this one right here. This first swing down to this projection point. And then this first one right here is actually a very, very small projection right on the inside of this kickoff that moved up. This first projection, as you can see, I still have been measuring wave 1 and then basically projecting this now onto what I would consider wave 4. I would look at this as being a wave 1 or wave 2 or wave 3 or wave 4 or wave 5, possibly a wave 5, and just keep projecting forward. I had this projection which I placed yesterday down to this low, and I also put a couple different projections. So as you can see, this is the one that the market has been vibrating at. What you've got to do, I think, to stay in the trend, the best way to trade if you're not exactly familiar with Elliott wave, I use Elliott wave because it helps me gauge when a move should come to an end, short term, long term, whatever, it doesn't matter. And throughout the day, I know me and Anthony have placed such a great importance on the first projection or inflection that a market makes. And what we mean by that is if the market has been moving down in a corrective manner like this, which this is the bottom right here that equates with this one, then all of a sudden takes a stab back up and it actually breaches a previous swing low, which would have been this little area right here. As you can see this. Usually, I will not take that trade immediately. What I will do is wait for this to terminate and then pull back and try to determine where the pullback is going to occur. And as soon as I've done that, too, as you can see, when we had this projecting forward, the market came back and bottomed on the 19.1% projection, which is one that's Very, very few people even know about. I mean, I think I discovered this myself without even having anybody ever show me anything like that. But just spread it out to a few people, and I've gotten some good feedback. They see it working on multiple markets. Anyways, this first projection upwards, we can also take a look at this one as being a larger degree and also superimpose that onto this one at this point if you'd like to. But since this one is working for me, and I'm just going to leave it as is. But what we look at now, what we see is a series of higher highs, higher low, higher high, higher low, higher high, higher low, and continuing. The first technical break that we actually had was right here at this level, where you can see that the market swung back down, made a smaller swing lower than this one, which is telling me that we're probably going to go back down a little bit lower again. Seeing that this had just been a kickoff, we kind of figured that it's just going to be a corrective move at that point in time, which it was, and it wasn't that big. This basically did a 1-to-1 Fibonacci ratio back down to this level, then supported. And as you can see, the market started doing the same thing again. A wave 1, a wave 2, a wave 3, a wave 4, a wave 5, and even inside this wave 5, if you fractal it down to a different time frame, you can actually see another 5 small waves within this. And then what happened there? So far at this point in time, you're looking at this is still moving upwards, corrective. It did not breach this previous swing low. So we would be looking at this to continue moving upwards. All right, came back up. Now it formed a secondary swing as I guess a lower high at this point in time, and came back down. But once again, when it came back down, I think this was an 81% projection of this one. I'm not exactly sure. Or very close to it. It still did not breach this swing. And by not breaching this swing, it's telling us that the market is still moving upwards. And what I'm looking at right now is this pattern right now has been kind of messy over the last day or so. But when you project forward from here, what do you see? You still see a series of swings that are higher highs and higher lows, higher highs, higher lows. This one right here was a good fake out yesterday, which happened pretty much at the close. But seeing that it did not come down and support on one of these projections. When this came down yesterday, I was a little bit leery about going short at that point. But anyways, this would not be a good point to go short. What you'd want to see is a pullback, then go short. But anyways, with this projection, as you can see, we're still making a series of higher highs and higher lows. This morning, I basically closed out my last long trade pretty much right here at this level. And that was also using the S&P 500 to validate what I was looking at, because the futures moved up as the cash index moved up all the way up until it touched this small trend channel, and then it started to pull back. So I said some of my thoughts were at that point in time this could be the top of the day. I did take one short. Basically, I closed it out a little earlier than I should have because I wanted to go out for lunch, which I did. That just recently returned. And since then, as you can see, the market meandered down a little bit lower from where I actually closed out my short. And basically almost landed perfectly. I think it missed by one tick on the 100% projection, and since moved up. And when you start to fractal a little bit closer over here, the market came up, resisted against the 127.2, backed off, came back, resisted again, backed off a little bit, and finally it broke through. What's going on now is that when you take a look at this, what do you have? Another set of series. That's what we have is swing high, swing low, high, low. I mean higher high, higher low, higher high. And then right here at this point, it now formed its first lower high. So that is telling us that the market should reach. I remember sending out an email that my first technical breach, where I think we're going to go a bit lower, would be if we broke this level right here, because the market came down, as you can see, supported several ticks right on that level till it finally broke down. When it did break down, like in most cases, it will drift down to the next Fibonacci level before you can find support. And that's what we've had so far now. So now, right now as it is, now we've also reached back up, breaking this swing high, also breaking this swing high, which is also telling me that we might be, going a little bit higher over the next day or two. What I'm thinking is going to end up happening, just looking at the market action, we're probably going to bounce back and forth between this level right here till I believe it finally does give away probably within the next few days. Could be Monday, could be Tuesday, could be Friday. It really doesn't matter. What you should be looking at, especially if you're looking for a top building, for another swing, you should be looking at these smaller time frames, and as you can see, they are very useful. Would I buy right here at this point? Absolutely not. Not a whole lot at risk here at this point in time because it's a small range. But the best place to buy something like this would be, I'd like to see the market move back down, make a swing that's higher than this swing, and start to move back up and then get in with the trade. Usually at that point in time, you can be pretty much sure that it might reach this previous top. If it reaches this low, and if I bought here at this level, there's very little at risk. And you might risk 1 point to take a trade like that. So that's pretty much how I approach the market. I mean, I use other things also, but through the intraday trades, that's basically what I would look at. Looking for the swings to continue, and when they break, that's telling me that there's going to be at least a short-term change in direction. You can take that trade if you'd like, or if you're using Elliott wave, you may say, oh no, I think this is going to be a fourth wave, and I'm going to wait to get up long again, or vice versa, but it doesn't matter. I can do this. I just wanted to clarify this is what you're looking at. And when you start to see all these swings moving up, there's absolutely no reason for you to go short until the market validates the fact that it's time to go short. And the first strong validation would have been this point right here. Why? Because this went down, made a lower high, which, you know, if you're going to scalp, this is okay too. Came back down, was supporting at this swing low. Now when it finally broke, the safest trade, once again, is always wait for this to come to a termination, come back up, and it resisted pretty much right at the same area as where it finally broke. And once you saw this resistance, this could have been a nice little trade. You can make, you know, a good 6-7 points in a very short period of time. It'd be a very safe trade. You can take profit wherever you like. Or, usually I like to take my trades pretty much at the fib levels, because usually there's always going to be some type of reaction when you do hit those levels, and which allows you to move in a stop loss very quickly and basically manage your risk. With that said, Godspeed, God bless. I hope this video helps, and I've also put this out there too to a few people that there's quite a few good analysts out there, and if you guys ever want me to post up any of their stuff, giving you full credit, just feel free to give me an email, and we'll go from there. We'll post something up, and that way we can all learn from each other. Godspeed, and have a great day, everybody.